Namaskar. Hello and welcome to P Guru's channel. I'm your host, Sridhar. This is a special transmission. And I have with me banker, venture capitalist, markets expert, future macroeconomist. I can go on, Sridhar C, and he's joining us today. And sir, Namaskar and welcome to P Guru's channel. It's very nice of you to have joined us right after the markets closed today. So viewers, we're going to wrap up today's market situation because everybody is saying the market's going to tank, this is going to happen, that's going to happen. Well, what happened today in the market is going to surprise you. Sir, over to you. And then whenever you want me to, I'll load the slide deck. Over to you, sir.
Yes, I think the market's finished. It started with about 1,500, projected 1,500 points down. The Dow, it finished at 350 points down. And the S&P finished at 11.83 points down. And surprise, surprise, NASDAQ was up at 15.48 points. So the markets did not flicker on this tidal wave of opinion against the tariffs. Tidal wave. You go around the world, you have a tidal wave of people saying wrong, 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 wrong. Imminent inflation and economic meltdown and a recession looming in the horizon. And there's going to be counter remedial measures. And we are in for a deep state of abyss. This was the kind of the context into which we got into this call today, Sriji. And I have read quite a few comments of our last. Thank you, everybody, for overwhelming support. We had a tremendous number of people watching our last programs on tariff, but we accept all the criticism that was levied against us and all the kind of observations that were made. But here we are, another day, and we have some interesting data to share as the markets open.
Yes, sir. And we have a slide deck for you viewers, and we're going to share that in a moment. But Sridhar Ji, I'm going to come back to you with this one question. I want you at the back of your mind thinking about it. This drive up in the last couple of years of the MAG 7 stocks. I want your inputs on who caused that drive up. And then those are the ones who could be making the most amount of noise. We can do that correlation also. Just one question for you at the back of your mind while we deal with this side deck, sir. Sir, over to you. Go ahead, sir.
Okay. Tariffs and markets. Obviously, we started the day with the markets in over the weekend and the markets in global kind of a turmoil. Most of the indexes falling and everybody predicting that Trump has to concede and the markets to go up. Otherwise, there's a global disruption in process, and it will take a number of years for the recalibration to occur, and Trump must kind of rescind the tariff agenda. This is the context in which we got in, but the Trump has steadfastly pursued the course. So we'll cover some of these thematics as we move along. Of course, we'll get another dosage of criticism, but we'll also get another dosage of probably good acknowledgments. But we believe in the story, we cover the story as we see it in the way the data evolves and the way the tariff is also going to reveal. I call it as the free trade disaster that we have witnessed in the last 2 to 3 decades.
Sir, over to you, sir.
So, therefore, to summarize what happened as we got into the tariffs, what are the effects resulting from the tariffs? How have the markets kind of responded? Who are the winners? And what do experts kind of think, around the world as we kind of step into the resolution process and or the market impact agenda? So this is how we're going to structure and present the data to you. So what happened? Next slide. So 60 nations with the largest trade deficits were targeted by the Trump administration. They said no more. Canada and Mexico, 2 of the largest US trading partners, retained the old tariff rate of 25% because there's a significant bilateral. And also, I think that 25% they felt was a reasonable cap to leave the 2 nations alone. Certain essential goods not available in the US were exempted, like copper, the materials, the semiconductors, some resources, rare earths. Yes, pharma notably. They were exempted from the tariffs they said, okay, we have to pay, and we pay for those tariffs, in terms of, so they were exempted from the targeting of the tariffs. Now, next. So, what are the effects of these tariffs? So, the tariffs they expected as the Trump came in, they in the market's perceptions were more aggressive rather than an increase from the past. So the average rate has gone up from 5% to 25% in terms of the tariff increases. Markets viewed this move as more aggressive, as I mentioned. Are these rates a negotiating tactic or a final stance? The market is still trying to digest for example, additional tax 35% on China, which it took it to about 56%. Vietnam 93%, for which they got 50%. Are these rates a negotiating tactic or is it a final stance? This was the thought that was limbering as we got into the day, and we found a number of answers which probably not only surprised the markets, which also surprised all the pundits around the world as well as the economists. Okay, so clearly the new rates are not seen as durable. This is how the markets generally felt. Over 15 nations now have approached the United States to begin the negotiating process, including Vietnam, Japan, EU, Korea, etc. All these big nations which have humongous trade deficits with United States.
Sir, EU, I think, is actually agreeing or sort of leaning towards 0%, isn't it? As are India, Vietnam, Israel, Cambodia and Vietnam. So there are 5 countries that I can tell. Taiwan, Cambodia, Vietnam, 3 around China. Then you have Israel and India, 5, and now EU, 6. 6 countries are...
And Japan.
Sir, and Japan. So that number is growing, as we can see. Those of these countries want to have no interest or no tariffs vis-a-vis products made. So there is this. The last 2 slides are going to be very important, viewers, because we'll come back to this because there's a direct implication of this. Over to you, sir.
Okay. So, what are how are the markets? So equity markets have responded, which always we call this a risk-based asset, have dropped by an average of 10 to 15% across major indexes around the world. Okay, major indexes felt the impact, and basically it's a cyclical, not cyclical, what you call as the impact of the market meltdown in one market gets cascaded into the other market. So average markets fell 10 to 15% leading up to today. And then investors started to migrate to safe assets like gold and treasuries and so on. We talked about that in the last call. What did we say? Oil will drop. We said that oil will drop below $60. Oil has dropped below $60 per barrel. And gold has edged past, $3,000. So edged past $3,000. So market volatility continues and is expected to persist until we have signs of a negotiated settlement emerge. And we are already beginning to see people coming to the table. And we'll discuss that in a moment because there's an interesting side when you discover the truth and what the truth is and why President Trump's tariffs agenda is not about mere tariffs, but it is also about the deconstruction of the world trade or global free trade agreements, which truly were not free trade, but the free trade disasters where it became everything arbitrary to the peril of certain nations. Next.
Sir, I'm on the next one. Who are the winners?
So who are the winners? Those with cash. Okay, because cash is gold, so they got some gold. Warren Buffett with $300 billion in cash. $300 billion in cash is actively scouting for opportunities because there is nothing fundamental in terms of many of these companies. Number one. Number two, the tariffs is not going to destroy these companies. There will be recalibration, or the same people who levied tariffs will come to the party and say, okay, we are removing the tariffs. Please continue to work with us. So there's no supply chain disruption. There is going to be a price reduction, with the tariff being eliminated. So why would there be an inflation if the parties come to the negotiating table and say continue? Because the consequences of not doing a deal with United States is much more catastrophic to these economies than being left on the limbo without a negotiated kind of a process in place. So true value assets will surface as a result of this, presenting some of the greatest opportunistic buys. If I was a guy, which I would be buying some of the things that I believe have fundamental value. For example, semiconductor stocks are of great kind of opportunistic value. Just as an example, some of the tech companies do have value. Some of the biotech companies have underlying value. Pharma companies have underlying value. So these assets are not, are depreciating due to animal spirits rather than the fundamental construct of deconstruct of any of the components within their underlying kind of architecture. And a trade negotiated settlement with 0 to 10% tariffs is going to cause minimal disruption and also going to cause minimal impact from an inflation point of view.
Sir.
So what do experts think across the world? You read anybody, any market pundits, any academics, anywhere in the world, across the board, they say we do not support this tariff agenda. Number one, many see this as an opportunity for potential recession, inflation, and disruption in global supply chains. Today, Jamie Dimon, the CEO of JP Morgan, came out and said, there's a potential looming inflation and recession, and recessionary trend is now getting 60% chances of a recession before the year end. You have to have a recession. You have to have 3 quarters of negative growth technically to consider a recession. Okay. So whether we will have 3 quarters, I doubt, based on all the indications right now in terms of countries coming to the party. Major shifts are occurring in market sentiments, and which is namely, historically, a considerable chunk of the portfolio used to be allocated to equities and a smaller portion to the fixed income, not smaller portion, number 2 to the fixed income, and then, of course, balance to alternate type of assets. But there is also now a move towards having a much more balanced fixed income relative to what you call as the equities. And those sentiments are driven by potential kind of disruptions due to geopolitical equilibrium shifting because of the tariffs is one kind of an example. The other important thing to note is that you will also see much more diversification. So maybe capital flowing into other markets as well as a result of this particular effect that everybody is feeling. Now, the final point in this specific experts' thinking is that there is definitely 2025. We're not going to have 2.8% growth in United States as the markets recalibrate. We expect it to be not negative, but somewhere in the less than 1% economic growth. Right now, the global economic outcome of 3% or the growth of 3% is now tapered down to less than 2%. So this is with inflationary winds in place. So this is the general sentiments of the experts, and most of them do not support, except the core team who are supporting Trump, and some right or central market economists believe that it needs to change. The tariffs need to change because the free trade agreements were not enforceable within the context of breaches. Nobody has, there are several breaches, but nobody, the most notable among them is the breaches by the China, and there's been no enforcement in terms of, the contracts or within the framework of the World Trade Agreements or the World Trade Organization agreements that has been put in place. So this is the reason why Trump is calling the bluff and saying it's not workable.
So what is his game plan? And before we do go to that, one question for you, sir. I had told you that one thing that I would ask you is, who were the people who were buying Max 7 stocks? Because again, viewers, you can agree with me or disagree with me, but P over E is a very important number. The moment it goes to a very high number, that's just, it's it's not real, it's not sustainable. Sir, your viewpoint on who is buying, who was buying, because they are the ones who have lost their shirt. 13% or 10 to 13% correction.
Well, I think that there are three categories of buyers. The first category of buyers is, billionaires and zillionaires, who have an understanding of this specific market and who can absorb, and they were one of the categories of buyers. Now they are sitting on the sidelines and waiting for the eventuality. So I think that's one category of buyers. Number two is that the a number of brokerages and hedge funds which have large amount of capital and look for hurdle rates of 20% and 30% from an IRR point of view, and you can find in traditional companies those kinds of IRRs on a annual cycle.
And IRR is, sir, what is IRR?
Internal rate of return. That is the yield produced by over a period of 12 months. What is the rate of return that is produced by the investment that you have made? So private equity and hedge funds, which require mostly hedge funds, they were very big buyers of the tech stocks. Some retirement assets, retirement funds, major retirement funds, they were also biggest buyers because they're searching for yield, and they drove the valuation of many of these companies, which is driven by what they think is the future value of the companies in from a today's point of view, and they drove the markets up. And the third is some of the well-known international fund managers. So it became a kind of a group of known people who held vast pools of stock, and they were the guys who were driving these Max 7, Max 10 stocks. I mean, that's why Nvidia is now just close to $2 trillion in terms of market valuation. People felt that this is going to be the biggest game in town for the next 5 years. They're not based on today's performance, they're based on what the performance of this company would be in future. Okay. So who are the you have Apple, you have Nvidia, you have Microsoft, you have Alphabet, obviously you have Amazon, then you have TSMC sitting somewhere there, then you have what's the other company which I have left out? Tesla was there. It moved down because of his production issues. Then you also have there's one other name that Netflix, Meta.
Netflix is there, right?
Yeah. So
Meta,
so these all things which were based on the so-called the TMT sector czars and the hedge funds, which were striving for larger hurdle rate, and they felt that these would be the companies which would be kind of driving the growth. And I think we have covered this in one of the shows. The flip side, 10 years ago, if you looked at, you had the Walmarts, and you had the Chevrons, and you have the Exxon Mobil, and you have even the automotive companies who were the leaders in the market cap table, all giving way to the tech and tech-enabled companies. And that changing landscape, much of the funding came in the last kind of 10 years, notably in the last 5 years. Just to give you a context, as of 31st December 2024, we were at $62 billion market cap in terms of United States, okay, out of roughly 3,700 companies. It's about these 20 companies.
62 trillion or 62 billion?
62 trillion.
Okay.
62 trillion. Okay. Today, as the markets closed, we are roughly around 52 to 53 trillion. Go back and check which amongst the companies which lost a significant part of the value. Why I say that? If about $5 trillion of that value was lost by these top 10 companies, it's only a matter of time. The number goes past 62 trillion at a short span of time. So Everybody cries, United States lost $10 trillion, $10 trillion. Not bothered, because it's not across the 3,700 plus companies listed. These are few companies which drove the value up, which also drove the value down. And when it rebalances, the value will come back. The question, therefore, is how will zillionaires participate? What is the normalization of the tariffs will mean to the mid-market and SME market in United States? We'll discuss this on another day. But to kind of summarize before I hand it back to Shreya for questions, is number one, Vietnam has come back and said they will do 0% tariffs. 0%. They will not levy. For which Peter Navarro, the trade czar, and the economics, one of the economic czars, and Kevin Hassett, they basically said, no, we're not interested in 0%. We want to get behind all the kind of wrong things that you do outside of the tariffs in terms of creating companies who want to bypass the tariffs and use you as a conduit to basically supply to United States. And yourself, you may want to create factories in adjacent areas and move yourself to overcome the imbalance in the tariff. So these kinds of tactics, then violation of intellectual property, violation of the norms, none of this is going to be accepted. So when you come to the table to negotiate, please come with clear consciousness. We're not just looking at the tariffs, but we are looking at the whole kind of the business ethos. A company with 92% now says zero. Well, read the tea leaves. What were they doing? What they were doing, were they correct? Obviously, you can find the answers amongst yourself rather than we trying. This is, please don't call that we are spelling out data. We're giving you data, plus we also saying to you that the free trade was a farce. That just became a mutually convenient agenda. Much of it kind of politically kind of. I've written a small note, private note to some of the people, which is to say that there are four people to be blamed for where we are today in terms of the so-called free trade. Obviously, politicians, number one. Number two, which is very important, academics who supported this concept of free trade, but without blinking an eye on all the stuff that is going on in terms of enforceability and illegality of the transactions that occurred within the parameters of what was discussed in WTO. Number two. Number three, who are the other people? Countries and governments which were willing to agree and accept these large tariff-based countries to operate from different jurisdictions to continue to sustain their business from their factories or out of their ecosystem, but without compromising on any of the kind of fundamental principles of what and how they need to conduct a free trade. So number three. And number four, I think if I have to say, which is that there was markets which continue to reward this format of business without kind of saying that there is underlying value and underlying strength in this type of a model. It's almost like a Lego which is ready to fall out. And I think more truth will come out as the days pass by in terms of this whole free trade and tariff-ridden agenda. Protect your domestic markets, but at the same time, put levies and seek concessions for gaining market access. China is a notable example. Vietnam is a notable example. Now, what's happened to ASEAN? ASEAN, which is a great community, but if you have Chinese-made goods, if you have an embargo, if you have Chinese-made goods coming through either Vietnam or Thailand into the ASEAN, you have broken the norm, which is namely you wanted to shield China so that you don't have problems on pricing in your factories. Then they come through the other way, then which is through the surreptitious means. Then you find that you're still at a disadvantage having embraced this free trade agenda. So I think these are the tentacles that Trump is trying to break through, and he may succeed based on what we are seeing. At least, for example, Vietnam has come out, EU has come out for a 0-0, Korea has come out, Israel has come out, Taiwan has come out. Taiwan says no. I want to cut the tariffs part of it, and I want to broaden my semiconductor kind of manufacturing, not kind of restricted to one or two specific venues. And I'll put capital as well. They've committed more capital investment into United States. It required a courageous president to push the tariff and call the bluff on these guys under the pretext of this so-called free trade. So this is the other kind of an important outcome that is going to come out. Mind you, we already has indicated that they're going to push for the interest rates, which will flow into the economy, benefiting the broad cross section. We are already seeing, and we mentioned this in the last call, oil going below $60. Okay, going below $60. That has an enormous amount of impact, especially on an average consumer. Okay. Now, who is one of the largest consumers of the goods and services in the world? United States, probably roughly around 20% of the volume. So United States was borrowing on one side and spending on the other side. And there's a slide which we'll try to put it on the link. If you see the average sales, which peaked around 8 trillion, is now roughly around $6 trillion in terms of the retail goods and services sales. So which also tells you that don't punish the guy who is buying and helping your factories and your jobs in other nations. So
thank you so much, sir. Yeah, go ahead. Yeah.
So in a summary, this is the agenda, and we are beginning to see the first positive signs of people coming to the negotiating table and agreeing what was going on is probably incorrect.
And viewers, you all have been asking what prevents somebody like China from making new plants in India and then routing their products through India. India could be, Vietnam, it could be Cambodia, it could be anybody, right? So this is a story that has appeared in Times of India, I think, and they are saying that Haier, Lenovo, and others look to move production from China, Vietnam to lower tariff zone. So this could be just a plant. I don't know. Maybe Sridharji, you know what is going on. Please weigh in on this, and then we'll go to Q&A, sir.
Well, I think that whether we want to call it a plant is a real story. I mean, the story is this is exactly what Peter Navarro called. There is always, auto industry in Mexico, we already called it. Most of the capital has come from China. The factories in Vietnam and Cambodia, we have already called that most of the stuff is coming from the Chinese capital. These countries don't have significant amount of capital. They may have resources, but they don't have the know-how and the capital to orchestrate these factories. So this is exactly what they want to defeat. This is not the whole purpose of free trade. Free trade is all about two nations to sit together and work on a common set of rules and frameworks so they can trade with each other. That just not includes price point alone. It includes enforceability. It includes legal jurisdiction for contracts. It includes that there are no mitigation. There's no political changes to flow of capital from repatriation of capital from the countries. It doesn't include violation of intellectual capital tomorrow with the know-how because of the plants being located in those countries. You begin to kind of fabricate and duplicate the products. There's a whole raft of issues that is covered under the WTO. Much of it was smothered under the bed under the concept that we will blink and I will blink and will blink and we'll continue to move our agenda forward. Who cares? There's no enforceability if we violate rules. So this is what has happened, Sri. This is an example. Imagine if India were to accede to China's request of, if you read the article, normalization or relaxing of FDI rules and allowing these factories to set up. On one side, they want to breach into and threaten India's borders. On the other side, you are coming in and asking for, setting up your shop so you can make $1 zillion of profit. Is India going to be opportunistic to let this kind of a thing happen? Time will tell.
Thank you, sir. And we have a few questions from our viewers. So let's just go through them quickly, sir, if you don't mind. Pavan Kishore wants to know, will the tariff game result in any realignment of global supply chain process from current players to new players?
Well, I think that if a person from Vietnam is coming and saying, I'm willing to give you 0%, I'm going to charge 0% tariff, well, the supply chain question disappears, because what they're saying is they want to continue to be a player in the ecosystem. If Taiwan says, I want to be, 0%, it says, okay, and I also want to deploy capital and create factories in United States. The disruption to supply chains will be minimal when they come back with an agenda to continue to transact on terms that are mutually acceptable. So if United States says, okay, mutually acceptable, this is my term, would you agree to the term? Based on current initial indications, we are moving towards some form of normalization and fair normalization of the tariffs, which is exactly the scope of the agenda when the Trump and his economic team started this plan.
Chirantan Saha wants to know, what are the chances Trump's tariff playbook would be used by other nations against non-US nations? Recent news, EU pushing for zero tariff on imported vehicles to India, while why India has accepted US tariffs but not EU?
Well, I think that first and foremost, first answer to the question, will the other countries follow suit? The answer is yes, provided you have economic and trading clout. If you can't just go with and say, hey, I want the same terms and I want a similar terms and I want to create a playbook that United States has. You should be a major player in the table, for you to be negotiating. So that's my first answer. Now, with regard to zero tariff on imported vehicles to India, why India accept US tariff but not you? Why? The story is that United States, by a long stretch, is number one of the largest FDI players. So they put a lot of capital, number one. Many of the Fortune 500 companies are located in India, generate tremendous amount of cash flow and cash and jobs in the Indian market. Number two. Number three, in terms of the exports, United States is the largest market as far as India is concerned as a trading player, very different to EU. So therefore, unless and until those things change, it may not accept EU.
Thank you, sir. Let's go to the next question. Gamers Galore wants to know, what is Trump administration plan to handle judicial overreach? Seems like federal judges hold lots of policies hostage to their whims and fancies.
I think this is not a subject for tariffs. I think this is more a generic subject.
I think we will get to it later, sir. We have one more question and then we can wrap up. Pavan Kishore wants to know, will this have a downgrade impact on India's GDP estimate of 6.3%? Will India see a downturn?
Well, right now, I think India's, I think my number that I'm hearing is 6.5%. At this stage, India is also a large domestic consumer. So I don't see a significant headwinds as far as India is concerned. You saw how India weathered. We have a very fascinating slide, how India weathered the storm, most notably on the energy prices. That chart will make a very fascinating reading. Once upon a time, United States was, fourth largest supplier. Today, it is, it's not even in the picture. And the Russia supply has dramatically increased into India since Ukraine war. So I think India is playing the game, but as a player, India has India will have to look at how it harnesses its economic progress and its trading partners. But India always seems to have negotiated the terms where it finds that there is strategic interest aligned strategic interests with the partner. Clearly, United States is one of them.
Thank you so much, Sridhar Ji, and it was a wonderful talk. We will be back again, viewers, once we have more breaking news. But I think for now, the storm has passed, I think. Even though, in fact, the Fed, it was expected that they would announce a rate cut of 25 basis points. That has not happened, Sridhar Ji, as to the best of my knowledge. And the market has stabilized. In fact, NASDAQ has a small positive. So I think the worst is over, perhaps. What do you think?
Well, I think that we are beginning to see the first signs of amicable settlement by major the 5 or 6 or 7 players whom we mentioned. They are in the top 10 in terms of the major trading player partners, especially importers or exporters to United States. That sets EU is big, Japan is big, Taiwan is big, Vietnam is big, Korea is big. So that sets the game plan for others to kind of follow. They're smaller within the context of these players. So if I have to answer your question, Sriji, I think there is, let us say, there is an impasse, or there is a kind of a slowdown, or there is a pause. And once we see 3 or 4 of these countries signing a deal with US and US reciprocating it, I think then we can say the storm has passed, and those who have remained in the equity markets will be the winners as they come out of this particular slump.
Thank you so much, sir. Namaskar.
Namaskar. Thank you so much.